Yeah, so last week I tried to make this introduction into our episodes, saying, welcome back to the episode and everything. But it just felt so unnatural. And I feel like we're just not going to do that going forward. And we're just going to keep on just, the intro will just be us talking. It is
to be fair, it wasn't too bad. I was told that we were both pretty awkward for last week's episode when it comes to the introduction. I felt it was okay. Maybe because I always thought that our introduction has always been awkward. And I was fine with being awkward. I thought it was signaturely, it's a signature. It's a signature being awkward.
It's the awkward podcast.
How do we start? But to be fair, that's what we always do. We always go how do we start?
Yeah, that's true. But I think it's, we've just sort of accepted that we're just going to start and it is what it is. But then I think when we tried to make an introduction, it just made it very awkward, right?
Yes.
But anyway, that being said, let's dig right into it. This week, we wanted to talk about the sort of brokerage app, right? Because I feel like it's been a big topic for the past year, especially during the pandemic. Just the episode with GME has put into spotlight a lot of the retail trading side of it. I feel like the pandemic itself has caused a lot of people to think about investment, maybe because they had more times at home, maybe because they felt like they needed, other forms and other streams of revenue. I feel like just trading and then therefore, online brokerage and new brokerage app have been, very put under the spotlight during this whole pandemic. And one of the biggest app out there whenever it comes to the sort of new fintech of trading is Robinhood. But we're not going to talk about Robinhood, obviously, because we wanted to focus on its sort of Asian counterpart. And the main one will be Futu, right? Futu is the company that is based in Hong Kong that also have their own sort of trading app, which is called Moomoo. We're going to do a little bit of comparison with WeBull as well, just because WeBull has been, I feel like they've sponsored every single trading YouTube account out there, right? I feel like, and this is what you felt as well, right? Like you've seen WeBull
literally everywhere. I mean, every time you go on YouTube and look, you just type, be it crypto, be it stock trading, anything related to finance or you see WeBull sponsoring the YouTubers. It's amazing, right? And I think. In the past few months, especially after the GME saga, Weibo has gotten a lot more recognition. Being a great alternative to Robinhood, of course, with the whole saga. But, back to your point, I think 2020 was a very different year for most people. In the past, I guess most people spend their time or the daytime working that they probably, don't have the ability or time to trade, I would say. Not ability, but time to trade. They don't have the time to actually invest in starting companies, and paying attention to what's happening in the stock market. So they are a lot more passive. But 2020 was time when most people were at home, right? And suddenly many people find themselves be it out of work, or you realize, you're working at home, but you have plenty more spare time because you don't spend so much time, traveling. You suddenly realize, okay, I can participate in the stock market actively, and it seems like stock market is doing massively well, even though the world economy was coming to a halt. That this could be a good way to supplement my income. Could be a good way for me to generate returns. So I think a lot of retail people or the general public, right, started trading, started investing.
Yeah, and I think more than that, I mean, obviously those are the factors that we've mentioned, right? The fact that you had more time, the fact that you were at home, the fact that you couldn't do anything on the weekends. But also you had the fastest bear market turning into bull market. You had the fastest sort of dip. Everything was, quote unquote cheap. And then you had the surge in prices and there's also as much as you had much more retail trading, you also had an explosion of accounts on YouTube, on the internet, just people who thought they were trading geniuses because they made a lot of money. And at the same time, whatever you bought during that dip,
everything was one way out.
It was a dip. Yeah, it was only going up. And I feel like these days, especially if you go on Reddit, if you go on other type of forums, you see a lot of concerns because people like thought that, you know, whatever they bought was just gonna go up, especially the big tech names and especially like a lot of like more speculative stocks that really, you know, really shot up to the sky, right? Really, right? And now that the market is sort of calming down, you know, there's worries about the interest rate. There are commodity prices surging, which is sort of reshifting.
Yeah, I mean, there's a bit of rebalancing in the market right now. And
yeah, and you see people, just being really worried now. And I feel like, you know, those are the two sides that we've sort of seen from this craze, right?
Yeah, I think
which is also why
what 2020 and I guess the first half. Or what 2021 will be. So before we go too deep into that, I think, you know, that'll be one of the key topic of discussion. But let's just give a bit of introduction to our main lead today, which is Futu, Moomoo. So Moomoo, as you said, it's founded in Hong Kong. I think, if I'm not wrong, in 2012, back in Hong Kong, and it's founded by Leaf Lee, which is number 18 employee in Tencent. When I mean number 18, he's literally, what I'm saying, he's one of the pioneers there. You know,
he's the 18th person to have joined the company.
So probably if you think about, you know, being one of the earliest employees there, you know, you would have probably you would have made your money from Tencent IPO, and if you held this Tencent shares till now,
supposedly,
you probably made a pretty comfortable fortune. That also means you're one of the pioneers in the tech industry in China, because, you know, being a pioneer in Tencent is like, how would I call it?
The pillar,
the foundation of China tech, the modern China tech. I would definitely call it
for so many things, for so many of the for the innovations as well, right? Not just because it is obviously the biggest social network in China, because it owns both QQ and Tencent, and, you know, it's one of the two that you're using for communication's sake. But also, like, all of the, you know, the WeChat public accounts, so that's how you interact with, like, writers, journalists. The fact that in Chinese we call them 小程序, which is like mini programs, which is things that you can use on your in your WeChat. And WeChat itself, like, a big part of things was also like, it's like an app itself, right? Like, a lot of people compare it to WhatsApp, but it almost feels like an OS. It almost feels like an operating system altogether, because you can literally just stay within WeChat and never leave the app, right?
Yeah, I mean, it's a super app concept. It's something that we don't see so much in the West. You know, like you say, it's an app within an app. Not an app within, but it has apps within WeChat itself,
within
right?
the apps,
and, you know, because of that gives WeChat sort of immense power into directing the traffic flow, you know, of where users would go, being able to draw attention to certain apps, and in a way, I wouldn't think I would want to say dictate, but in some sense dictate which app would sort of gain popularity, just because they're giving you so much exposure.
Yeah.
So,
I mean, they're definitely a good enabler, like, for your app, right? I mean, we've seen it with Meituan, we've seen it with Didi Tuxing. It's not, I mean, dictate is not, I guess, a bad word here, almost, right? But yeah, that being said,
I mean, it's an app. I mean, just imagine how huge the size is, right? WeChat is the app that, just like WhatsApp, it's in the phone of, you know, 1.4 billion population of China and more, right? And just think about it. You know, being if you are an app that is working with Tencent, like working with WeChat, they will place, you know, your app within their ecosystem, and it will be in the phones of that 14 billion users. Sorry, 1.4 billion users.
1.4. You keep saying 14 billion. I mean, every time we talk about this, dude, we're not that many people. Like,
sorry, I just think of China as
there's not even that many people in the world.
China just feels like it's the biggest country with the most number of people. I think it still is, if I'm not wrong. The numbers just came out recently. It is. So it is still the most populous country in the world. So that being said, sorry, let's just go back. So it's founded by Leaf Lee. Tencent is a strategic investor, right? And they provide technology infrastructure and enterprise support for Futu. So when you talk about enterprise support, being a strategic investor is not just, they sort of say that, I'll direct traffic flow to you or volume to you. No, but I think in this case, they may help with how the whole app is set up and the whole structure of the app. It might be possible. And I think that's what we have seen, the different kind of help that Tencent has provided to the investee companies that it has worked with.
Yeah, and I think you've seen this a lot as well with because you were talking about the support and everything. I think the clearest example was with Didi Chuxing, right? Like when they were in a lot of troubles because of their data servers not being able to withstand the surge and demand of their app. Tencent literally deployed engineers and their servers and resources. Like, it's very valuable, right? So like more than just the platform, you also have almost like the entirety of the know-how that they've developed in-house, right, in Tencent. And it's, more than just the money that you get from this venture sort of partnership here. It's also like, the whole infrastructure that you get, and it's immensely valuable, right? I think that being said, the founder is still, so it owns 34% of the equities, but with a 68% voting right. And Tencent owns around 21%, and the rest is other sort of PE fund, VCs, and so on. The objective of the app really is for Chinese investors to trade overseas stocks.
Let me stop you.
That being said,
yeah, exactly. I was gonna stop you there. That probably was how it first started, but I think as the business evolved, as it's looking to expand overseas, its objective and mission probably evolved with that, right? And right now it's really sort of, I would say, it's kind of head on with the other competitors like WeBull and Robinhood, because it launched in Singapore and US in 2021, and everyone knows that WeBull and Robinhood are two of the new apps that really gained foothold in 2020, right? And I think they are trying to gain traction there as well. The slight different strategy here that they have as compared to Robinhood and WeBull is that Futu or Moomoo isn't just a trading app itself. It's a whole ecosystem of a community ecosystem whereby you have this platform for users to discuss about stock ideas, to generate ideas, a bit like Seeking Alpha. All right, and I guess that's the interesting part of it, whereby WeBull and Robinhood is really just a platform for you to trade and invest, right? There's no community spirit behind. There's no discussion of ideas. You probably get the information elsewhere, but Futu tries to have that within their whole ecosystem.
Right. So basically, I think it's getting a bit confusing for people when they're listening to this, right? So Futu is the company, right? And then Moomoo is the trading app. And Futu also owns a sort of community-driven trading forum, right? Which is called Nyo.
No, it's called, yes.
And
yes.
What do you mean? I think it's called Nyo Community, right? And the whole, so for people who don't know, but like Moomoo, you can guess it, right? It's like the cow, right? But obviously it's a reference to a bull market, which is usually referenced as a good thing. A bull market is essentially like when the market is going up, which is called a bull market. And if the market is crashing down, it's called a bear market, for anyone who didn't know. And then Nyo means bull in Chinese, so it's a lot of reference to the bull. And then you have WeBull. So smooth transition over, which is to come up with to the second player. It's not a Chinese company, but it was founded by an Alibaba alumni, which is called Wang Anquan, right? And he is also backed by Lei Jun, which is Xiaomi's founder. And Xiaomi's founder has always been praised for being, sort of a pioneer. He's very famous. So he's got that sort of persona that accompanies his investment more than just Xiaomi as a brand, because Xiaomi is also as a brand tremendously successful, right? And in that sense as well, I think Xiaomi owns around 14% of the stocks. The founder owns 35%, and then the rest for PE investment. Which is also, if you look at I believe if you look at the PE firms that has invested into WeBull, is a lot of Chinese PE firms, right?
Yeah, it's mostly invested by Chinese PE firms. But I think that's more of a factor of the founder's relationship, because he himself was an alumni from Alibaba, so probably he knows a lot more. He has a lot more connections and a lot more relationship back in China, whereby it's easier for him to get additional funding.
But yeah, so if we just take a quick look at the numbers. So in terms of users, WeBull is around more than 2 million, right? Futu is around 1.5 million trading users, but that's taken into account obviously their Hong Kong branch and then the Singapore and plus US, right? So WeBull is just US and Futu is has more location across the world. And then if we benchmark it to probably the most popular trading app, sort of new trading app, Robinhood, is 13 million users. But what's interesting with Futu is that, as we said earlier, they have 1.5 million trading users on Moomoo, but they have 13 million accounts active in their new community, right? So the Seeking Alpha equivalent. If that is quite remarkable when you think about Seeking Alpha is probably the benchmark when you think about like forum, community-driven trading forum sort of thing. And I believe that Seeking Alpha is around like 21 million users on monthly average, right? So that's Futu is really, it's really up there, and they can really leverage on this to sort of convert the people who are reading about trading, who are probably posting about trading, to actually trade with their own platform, right? It's just sort of integration that they really want to do. In terms of market share, WeBull is around 3% of the US market share. Futu is, as we said, they only started in the US in 2021. And surprisingly, they're already at 1.6% market share, which is really not that bad. Like, half of what WeBull is. And, we'll talk about it later, but they also have a very different sort of approach to how they monetize their business. So it's quite interesting. And Robinhood stands around 10 to 15%. So, I think just in terms of numbers, you can definitely see a lot of potential for Futu, right? But you can also see that Robinhood is distinctively
it's far
ahead of
in all factors here when it comes to the US market. I would say it's homegrown. It's the idea, like its name is Robinhood, and the notion that comes along with it.
It's been going on for a while.
Yeah, it's been around for a number of years, as compared to Futu that just entered the US market in recent months, and WeBull probably has been around. Yeah, I think WeBull has been around for a pretty long time, but they only gained prominence in last year. They've been quite behind the scenes, just trying to build up their own platform. But
yeah, because Robinhood, I think, has been around for almost a decade now. Because I remember reading about it like very early on. Like I think it was founded in 2013, 2014, somewhere around there. So when you think about this, Futu has just entered the market. And the reason why we talked about this, because I think we forgot to mention this at the beginning as well, is that for people who hasn't listened to the GME episode, and if you don't really know a GME episode, I would strongly invite you to listen to that episode. No bias. But that being said, just a quick recap is obviously GME is the stock of this gaming retailer, right? So they sell game. And the stock literally surged, it exploded, and a lot of people were sort of like, it became the sort of like symbolic between the retail investors against the incumbents, right? The big investors, and especially against the hedge funds, sort of. And so there was a lot of like, very anti-establishment sentiment almost, right? But like in this case, it's like trading establishment, if that makes any sense. And Robinhood got caught in the middle a little bit because they suspended the trading of GME, quoting it was too volatile, and there was like a huge upset, that really upset a lot of people. And so you had this sort of like negative sentiment against Robinhood because they did not deliver on their name, which was, Robinhood, right? Sort of stand up for the
in
little
essence,
guys.
Right? The GME saga was really a movement in some sense. I think a lot of retail traders or people on Wall Street bets or whatsoever, had the idea that they are running the Jeremy saga for the purpose of, in their words, proving it to the Wall Street, proving it to the big guys, right? And they would think that Robinhood, whose sole purpose, or rather their purpose in their mission statement, is to help the retail, to help the retail players and to help the retail investors balance out the game, right? And for them to ban trading at this point of time, whereby they need Robinhood the most, it felt like a step in the back.
Very much so. And, a lot of people has called this episode as the modern is a big word here, but, the new form of Occupy Wall Street, right? So it shows to the extent of like how much this was, something very symbolic in terms of movement more than anything else. But we'll talk about why Robinhood did what they did, and then obviously, why obviously WeBull and Futu has taken the opportunity to capitalize on this form of negative sentiment, trying to grab all the users they were looking for.
I think literally.
But that being said,
just to jump in a bit, but literally on the day whereby they stopped trading, everyone, I think every trader, every retail trader out there was literally just looking for an alternative platform that allows them to continue trading GME stocks or EMC for that matter, right? And WeBull happened to seize the opportunity, and I think Futu did as well, as an alternative to say, okay guys, we are still open for trading, and we'll try to stay open. I think ultimately they did stop, but they tried probably tried their best to remain as available as possible. And I think they reinstated trading on the day itself, at the close of market, as compared to most of the brokers who did it the next day. Yeah.
But that being said, it's also like, because we talk about this as if, there are no other alternatives to Robinhood, and that is not true, right? One of the biggest alternative, and that is also very famous, is eToro, for example. That's been around for quite a while as well, and they're pretty established, and they're an Israeli-based company, I believe. And there are a lot of like this new form of brokerage that's been around, right? You have Revolut Trading as well now. You have Trading 212, but I don't know how. I don't really know that much about it. But so there are tons of new brokerage, but obviously we take Robinhood as a sort of benchmark because it is the biggest.
Yeah. But okay, before I think this is a topic that we really want to discuss for this episode, is why did these brokerage rise so quickly? Because to be fair, as you said, there are many brokerage other than Robinhood, WeBull, Futu, eToro, Revolut. There are so many other brokerage that's been around for ages, right? Trading is not new. Trading for retail investors is not new. Think about it. You can trade on Fidelity. You can trade with your bank brokers or whichever. Most people used to trade with their own brokerage, be it Fidelity, be it all kinds of different brokers.
Banks as well, almost, right? A lot of you can just go to your bank and open a brokerage account and then trade stocks.
But the thing is that I think in some sense, from my experience in the past, when I started trading or started investing years ago, it was intimidating for some who, if I try to recall my experience when I open the app or open the web version, it's intimidating, right? There's so many charts, there's so many different buttons you have to click. Even just buying one stock or trying to figure out how do I use this platform, it's intimidating, right? I feel like I would probably end up clicking the wrong button and not knowing that I executed an order that I didn't want to. It sounds foolish, but there was genuine fear when I first started using such apps.
And I think this is a very humbling experience, especially when you do study finance as a course, right? And so you study finance and all these so you learn about corporate finance, about market finance, right? And you learn all these, terms, you understand the logic, you even go into the maths and everything, right? You learn Black-Scholes, you feel like you're a semi-god because you understand all of this. And then you go do an internship, you open a Bloomberg terminal and you're like, okay, I'm trying to find my risk-free interest rate. And you're like, what is the risk-free interest rate? There's nothing, like there's not just a rate that you can tap in, and it gets really complicated, and like you go into Bloomberg, you try to find the quotes, you're trying to understand all the different instruments, and then especially when you go on the brokerage platform, and then you look at like the types of order that you need to make and everything, you can understand the theory as much as you want, but a lot of the time if you don't experience this yourself and you don't actually go trading, there's a big side of trading that you just would never learn from theory, right? And I think that was a very humbling experience for me when I did my first internship. And you learn so much about the theory, and when you first log into a Bloomberg terminal, it can be very intimidating.
Yeah, I mean, exactly. But if you think about how these brokers actually rise so quickly, Robinhood, WeBull or Futu, what they really made a difference was they simplified the whole UI.
Yeah.
They made things so easy for the user, first of all, to register. If you think about opening a Fidelity account or opening an interactive broker account, it might take you 2-3 days or more than that to actually register. But when it comes to opening a Robinhood account or a WeBull account, it might just take you a couple of hours.
24
exactly.
hours.
First of all, it was easy to open an account. Secondly, the whole UI seems so simple. Right, you probably have less than 10 buttons to click, 10 options to choose from, and you executing a trade or simply just typing a number, putting your money, and you can do it straight away. You don't need to know much. You don't need to think twice. It's just go with the flow or decide whatever you want to do. Which honestly, it's really up to individual, right? Some people would think that trading, you probably need to have a lot of analysis into it. But Robinhood takes away a lot of the complexity in that sometimes you feel like decisions can be made. Decisions when it comes to money, when it comes to investing and trading, or let me put it this way, Robinhood probably made it such a way whereby it seems like you don't need to know that much or don't need that much additional information to make a trading decision. And on top of that, I think it's also very important to take note that the rise of these brokerage is not just it's not that they came out of nowhere. I think there was a very big macro push behind that came out in the past few years with zero commissions, right? So if you think about how brokerage used to earn money in the past, they charge brokerage commission whenever you carry out a trade on their platform. They would charge 1% or 0.1% of whatever fee of their trade. Right, but I think from 2019 onwards, most US stocks became almost zero commission. Right, I think that made the biggest difference, because for this brokerage, they now are able to be able to survive on not just on brokerage commission, but rather they have to find they are able to find alternative way of monetization. And because it's zero commission, they are better placed to attract new customers who never traded before, and find that this is a new platform. Given that all the brokerage are zero commission, why not give it a try? Right, this platform looks less intimidating. It looks much more user friendly. It looks like a very interesting experience, and I like the idea that it's there to sort of help to balance the game between retail traders and institutions.
Sort of, yeah. I think the balancing the game really came with Robinhood. I think even before Robinhood, right, the movement in fintech was, one, we said, right, simplifying the UI. Simplifying the UI is a big theme across fintech and insurtech, and that came for retail banking and your bank account and everything, but obviously that's with trading and with investment with the robo advisors. And then obviously the zero commission was a big trend, because obviously as technology evolved, booking and then all those like all the technology behind brokerage and everything evolved, there was much less friction that were incurring cost, and therefore zero commission was possible, right? Because if you think about before, when you had to physically buy a stock, and by physically buy a stock, I mean you literally had to go to the stock exchange and shop, and then like get a piece of paper.
Sorry,
and that's not even far fetched.
I I didn't
No,
know
no,
you
but
were this old.
yes, exactly.
that
You
were-
say this.
I didn't know you were living
But
age.
you say this, but for example, like no, but you say this, but no, but I'm thinking, my grandparents, for example, like they bought stock like that when they were young, right? And they sort of, because if you think about like the people who are
Really?
using a lot of those
Wait,
trading
sorry,
and those
you-
new trading
Wow,
platforms.
Your grandparents, was that how your grandparents used to buy stocks?
Yeah,
China?
like in China, like back in the days when they first started trading, they had to go to the stock exchange, look at the screen, then go into a window, like say which stock they wanted to buy. They had this little
Yes,
pamphlet
yes.
and book that they gave, and then like it would be like, okay, you own X amount of this stock, then you go home or you wait another, and then you just. And that was how it was done, right? And then you think about like now everything is electronics, right? It's a lot of like, it's all digital, everything is booked, there's high frequency trading, so the cost that decreased led to this form of zero commission being possible, and then new companies taking advantage of this and then forcing incumbents, right? Because now Vanguard, Fidelity, they all came out with zero commissions services as well. So that's the overall sort of climate in which these new companies, these new fintech trading companies were able to evolve. I keep saying trading, but it's really like brokerage more than trading, right? Because it's not like they actually trade themselves.
When you say this really reminds me of the scene in the Wolf of Wall Street, whereby you're literally sitting and talk. You have the brokerage calling you and just pushing some penny stocks to you, telling you, okay, this is penny stock to buy, and you just say yes on the phone.
Yeah,
it's a totally different experience. As I would think that might have been. To be fair, I think it would have been quite scary to think that I'm trusting so much money to someone over a phone that I'm not too familiar with.
Yeah, then you're not too familiar is like more than a euphemism that you've never heard of, right? The guy just cold calls you. That was like a big part of how brokers made money, right? And this is also why that today being a broker is not as valuable that it was like 20 years ago, right? So
yeah, it's a very different game.
It's a very different business model for sure. So yeah, that's the overall.
That being said, you see, that's what we saw a lot in the US. You see, we had things like eToro, Interactive Broker, and then in more recent years we had Robinhood, WeBull. But on the flip side, when you think about Asia for Chinese users, you probably didn't have too much of that in the first place. Yes, there are a lot of online brokerage that you can use with the banks and whatever. But like we mentioned in the earlier part of the episode, right? A lot of this brokerage had rather intimidating
interface,
UI interface, right? So having Futu or Moomoo in this case, coming up with an app that makes it simple for retail investors.
Yeah.
I think it's coming in the position of, like I said, this is why we say this is China Robinhood, because it's playing the role of Robinhood in China.
Yeah.
Right. And I don't know about you, but have you used the trading platforms in China?
Well, I haven't
have
used
you
them.
Seen the one from Moomoo?
So I've seen them because obviously, they're very they're everywhere in China, right? Like, and I think there's tons of different brokerage like app in China because different companies will all have their own app. Obviously, right? This is the same as the West, but they're all also very similar in this way, and they're a bit complicated to use, but to be fair, they're all getting better. I think Futu, the reason why I wouldn't agree that it's playing the same role as Robinhood is that I feel like the form of like digital trading and accessibility of trading in China has always been very developed because there's so many retail trading, right? So like one of the biggest difference between the Chinese and the Chinese stock exchange market and the Western stock exchange market is the amount of retail investors, right?
Proportion. I think there's a proportion of retail investors.
Yes, and I feel like trading is when you're in China, trading is a main topic. for people to talk about. You know, it's as common as I almost want to say football is in the UK, for example, right? It's sort of like everyone, even if you don't trade, you know about trading. You know, if you're like a lot of very famous YouTube, the Bilibili influencer, right, in China, they might wish you that your stock's going to go up. You know, it's something that it's something that, you know, it's very like common, because there's so many people who trade and people who knows about trading. Whereby I feel like in the West, and, you know, especially in Europe, but even in the US, I'd say, is that people think of trading as more of an institutional thing, right? And people who do it are more like, you know, it's like a very niche hobby, I want to say. You know what I mean? So I think, you know, because of that, you had already a lot of access of, you know, those trading apps and of like online brokerage and everything. I cannot pronounce that word for the life of me. And that, you know, and I think Futu comes in of like more of an integration of everything, right? Because they have like the community pass, the same way as you would see with Shuiqiu, for example, which is like another sort of forum, trading forum, and they also have their own investment. So they don't do brokerage per se; they do like investment robo-advisor sort of thing. Mm-hmm. But it's that form of like, you know, trying to integrate a lot of the different services, and then, yeah, as you said, make it even easier. But this is why I feel like it's almost different than Robinhood, because it's like it was already easy and it's just like even easier. And on that, because we talked about the macro trend in the West with the zero commission, on that, Futu is also leveraging on the fact that before you had this sort of all the investment and the trading making even easier with Ant Financials, right, with Alipay. Because within Alipay, you could just invest your money, right? You could put in money into your wallet in Alipay and then you could just invest it. And because of like the regulatory crackdown and sort of like more of, sort of scrutiny around the whole investment side of and financials, I think it leaves also a big spot for all these new sort of like companies that want to do a more integrated service, that want to do even, you know, really target maybe the newer generation. Because again, right, the reason why trading is such a main theme as well is because a lot of like, you know, our parents, our grandparents trade, but the newer generation might not have been as much in contact with this than the older generation. So I almost want to say it's also a generational thing here.
I would tend to agree with you being a generation thing, because in 2015, you know, there's this massive stock market crash in China, and even to 2021, you know, it hasn't really recovered.
That was a bad time to do an internship.
Yeah, exactly, right?
Yeah.
Don't talk about it, but you know, it's the market hasn't recovered since. So because of that, stock market, stock investing fell off favor in a lot of the youngsters' mind. It didn't seem like a way of how to a lot of youngsters in China, it didn't seem like that's the best way of how you should grow your wealth. And on top of that, the market for real estate was booming. Right. So in essence, it felt like the best way to grow wealth was to invest in real estate and not in the stock market.
Which is true.
Which is literally what happened for the past 5-10 years.
Yeah.
But I guess it's coming to a point whereby, you know, there may be a switch, you know, there may be a different flow. I don't know, right? To be fair, and just saying back to Futu, right? I think I do agree with your point. The main key here is not to say that is a revolutionary change. It just made things easier, and I think it provides additional access or ease of access for Chinese users to trade overseas, and that's not something that you know, most Chinese investors can do very easily on their own platforms.
Yeah, the same reason why a lot of sort of American investors like to buy ADR is because they might not want to subscribe to the Hong Kong Stock Exchange, or they might not want to subscribe to like the Shanghai Stock Exchange. I don't even know if you can do that. But yeah, so it's the same thing, right? It's like the ease of, you know, if you want to buy Alibaba, you just buy the American deposit instead of the actual stock.
So here, next thing we're going to talk about is really
Yeah.
monetization. And I think this we roughly brought this up earlier.
Money.
Monetization.
Yeah.
So as we said, most brokers monetize through broker commissions. In the past, through your commissions being earned from trading, through margin finance interest. Futu is one of those that's still a bit more traditional in this aspect because a big bulk of their business is in Hong Kong, whereby they still continue to charge broker commissions. All right, so it's sufficient revenue to sustain the business, right? But in WeBull or Robinhood in the US,
they sell your
you didn't have to say it this way, but they make money by selling customer orders to companies, like to market makers. And I think this came out a lot in the Jeremy saga, which is, Robinhood selling data to Citadel. And what they do is that they can make they can make money on sort of taking on a tiny spread between the price you are willing to pay versus the price someone is selling. So they can buy at $10 and 0.1 cent from someone else, and then sell you at $10 and 0.2 cents. And from there, they make this 0.1 cent spread, right? So in this way, it's I would say sort of because they know how much you're willing to pay, they have this slight advantage over you. Unfortunately, I would say this practice is perfectly legal, and I guess.
Fortunately, this is legal.
Yeah, fortunately, this is legal.
Yeah, whose side are you on?
Right? Okay. And brokers are really required, to. But the problem is, when you are working with a brokerage or you're trusting your money as a retail investor, you would think that the brokerage would probably try their best to seek the most advantageous trade for you, or at least at the price that you, I wouldn't say you're most willing to pay, but try to find the best price that match your order.
Well, I mean, depending on the type of order you make, yes. But that being said, I don't ever expect that, because first of all, I mean, because you're not paying commissions, right? So yeah, as you said, they have a PFOF model for Robinhood and WeBull, right, which is the pay for order flow, which is what you described as essentially saying all of your orders, the flow of your orders on bulk to market makers. Yeah, I don't ever expect, I would not expect, because you're not paying for a brokerage fee. And also,
I know why
you don't have an alternative.
I know why you say this, but honestly, if this is what this is what they do for institutional investors. And traditionally in the past, This is what they do with your brokers, because in the past, if you are not the person executing your own trade and you tell your broker, okay, I want to pay below $7, right? They will try their best to find the most advantageous trade for you. Sometimes they will go below $7. They'll do the trade at $6.90, $6.95, $6.93, whatever. And
if you're a hedge fund and you have a prime broker,
Back to your what you say in the past. In the olden days, where you're writing on a piece of paper, this was how brokers used to execute trades. Right? If you have and of course there's a bit of bias, so it makes a big difference when you have a good relationship with a broker, because they will be in the best position and they may execute your trade. They may prioritize a trade if you have a great relationship with your broker, right? And they'll give you the most advantageous price. Versus someone who they barely know, they might just give whatever price they're willing to pay for. And this was how traditionally brokerage used to run. But to this point, to this day, because now everyone is just literally trading on their phone, trading on their computer, there's no more middleman in between, and you just think that whatever price you put in should be the price that's being executed. There shouldn't be one more person behind you trying to do anything more than that. Be it taking advantage of it in what we mentioned just now as for market makers, or in the position of whereby they are trying to fight for a better price for you.
Well, yeah, but unfortunately that's not true, because I mean you're still using a broker, right? So you can't, and I want to say that it's illegal, but I don't think you can. Yeah, I think it's illegal unless you actually apply for maybe a broker license or something. But yeah, as an individual, you can't just go into the market and buy a stock, right? You have to go through a broker, and therefore although it seems like you're just passing sort of an order onto the market and then the market does what it does. That's not true, right? There is a lot of things that needs to be in order. There's a lot of things that, they're just a price matchmaking, and all of those are, softwares and everything that is being maintained by brokers, by banks and everything. So it's more complicated than what it seems, but because the UI has been so simplified, I think it also creates that disconnect, right?
But essentially, this is the point what made the whole GME saga such a big hurrah. Retail investors suddenly realized that maybe they knew all along, but it's suddenly brought to light that this was how Robinhood made money. And it just places them at a massive disadvantage if they are playing against institutions who are their own market makers. It's just like you're saying that you're fighting against the person who's grading you, who's selling you weapons.
The reality of things is a lot of fintechs, in the fintech scene and everything, they just end up being bought up by banks, right? Because they do a lot of like the good work on the UI and everything, but ultimately they need a lot of the legacy systems. They need a lot of those, customer data,
and they need the huge flow to actually have the advantage.
And it's hard to get it.
So this comes to a point where I want to mention this is something interesting about Futu, which is that they actually have their own platform. They spend years building up their own platform in Hong Kong. Yeah. Right, so as compared to a lot of, like let's say Robinhood that relies on Citadel being their market maker, Futu has their own platform. That's something that I totally forgot about, but I think I would want to mention here, and this is one of the biggest advantage I would say they have going forward, because they are not reliant on the third party. That's why they don't rely on selling all the flows, because they're using their own platform. And yes, in some ways it might impede how fast they can grow, because they need to scale out their platform accordingly. But this also means that they can continue sort of having this independence that may help them being seen as more neutral, being more customer centric, I would call it.
I think it's a very interesting case study, because obviously it comes at this point with the sort of end of the GME saga almost, right? Because of everything that happened before, and obviously with Robinhood, trading in general that is picking up as well during the pandemic, and therefore I think it's a very it's a good case study for different types of business models, because Robinhood has been very famous in how they operate, and this is obviously the sort of like an Asian player that is also breaking into the US market with a slightly different business model, and it will be interesting to see whether they adapt themselves to the market or they are able to create a different route and therefore apply a different business model to it. And that'll be it. So if you guys want to follow us on Instagram and Twitter, it's @ProductiveLazySundays. And as always, thanks for listening. We'll catch you in the next one.